Hey everyone, so Apple just dropped some pretty interesting news, and honestly, the market's reaction is not what you'd expect because despite announcing a cool new feature coming to the iPhone, the stock actually took a hit. Let's break down exactly what's going on here. So first, the feature itself. Apple is reportedly planning to launch a bill-splitting capability directly integrated into the iPhone experience. Now think about that for a second. We're talking about the ability to split restaurant bills, shared expenses, group trip costs, all of that, right from your iPhone without needing to jump between apps. No more awkwardly pulling up Venmo at the dinner table or texting your roommate 17 times asking them to pay you back for groceries. Apple wants to make that whole process seamless and native to the device you're already using every single day. And from a product standpoint, this actually makes a lot of sense for Apple. They've been aggressively pushing Apple Pay and their broader payments ecosystem for years now. Apple Cash already lets you send money to people through iMessage, so adding a dedicated bill-splitting feature feels like a very natural and logical next step. It tightens the grip Apple has on your financial life through your phone, which is exactly the kind of ecosystem lock-in that the company has mastered over the decades. But here's where things get interesting and a little confusing. Despite this announcement, Apple's stock, trading under the ticker Apple on the Nasdaq, actually slid. Now you might be sitting there thinking, wait, a new feature, more user engagement, deeper ecosystem integration, shouldn't that be good news for investors? And look, on the surface, absolutely yes. But the stock market, as we all know, doesn't always react the way common sense tells you it should. There are a few things potentially dragging Apple down despite this positive product news. For one, the broader market has been under pressure, and tech stocks in particular have been feeling the weight of macroeconomic uncertainty. We're talking about interest rate concerns, inflation worries, and general investor caution that has been hanging over the tech sector like a cloud for a while now. When the overall sentiment is shaky, even good news can get overshadowed pretty quickly. There's also the question of whether a bill-splitting feature actually moves the needle in any meaningful financial way for a company the size of Apple. We're talking about one of the most valuable companies on the entire planet. Apple generates hundreds of billions in revenue annually, largely driven by iPhone hardware sales, services like the App Store, Apple Music, and iCloud, and their growing wearables business. A new software feature, however useful and however convenient it might be for consumers, isn't necessarily going to dramatically change Apple's revenue trajectory overnight. Investors look at the big picture: earnings growth, services revenue expansion, iPhone upgrade cycles, and a bill-splitting tool, while clever, doesn't fundamentally shift any of those dials in a major way, at least not immediately. There's also some competition worth mentioning. Venmo and Cash App, Zelle, these are deeply embedded in how people handle peer-to-peer payments already. Apple will need to convince users to change their habits, and that's never a guaranteed win, even for a company with Apple's brand power and loyal customer base. So where does this leave us? Well, Apple investors are watching closely. The feature itself is genuinely interesting for everyday users, and the stock slide is a reminder that in the world of investing, a good product announcement and a good stock day don't always show up together. And it really makes you think, in a world where Apple can announce a feature that millions of people will probably use every week, and the stock still goes down, what exactly does it take to impress Wall Street anymore?